We're joined on the phone now by Michael Englund. He's chief economist at Action Economics. He's also a Bloomberg Best. Michael is one of the most accurate forecasters of monthly jobs data. And Michael, let's combine the two reports here. How much are today's jobless claims reports telling us about what we'll see tomorrow?
Well, I think this was a shot across the bow for tomorrow's employment report. Essentially, some will make the point that this survey, this claims figure, rather, is from a week that follows the BLS survey week, so it doesn't literally line up with payrolls. However, through the auto retooling period, early July, we always have very volatile swings in claims, and it's hard to interpret the figures. So the later weekly numbers give us some sense of what the trend was through the month, and with this high close to claims, the last couple of readings of claims have been stronger, I should say higher than expected. We now have a much higher trend in claims, and what was a sideways path in claims over the 5 months ending in June, and it was a pretty well-established pattern, now appears to actually have an upward tilt. We do seem to be seeing the claims numbers rise. If that is the case, we should be seeing private payroll growth right around zero, and zero would be a pretty disappointing number for the markets. We're looking for an 80,000 private payroll gain tomorrow. The ADP numbers yesterday showed a rise, and the ADP numbers tend to underestimate private payroll, so that may be a good sign. And all the sentiment reports from factories like the ISM and the ISM service number that came out yesterday have all been encouraging, so that's a good sign too.
There are a lot of conflicting data out here. Do we take our cue from jobless claims and confidence figures, or do we listen to the ISM manufacturing numbers?
Well, I think the claims have always been the best predictor of payrolls, and so if I had to guess what the surprise will be on Friday, I would tend to guess to the downside when we have these periods where claims are consistently telling us that payrolls are overstating growth. And so I think that's where the risk lies tomorrow. It could be from a market standpoint, however. Everyone's going to take the under, and we may get a relief trade if we don't get any significant weakness in Friday's data.
Significant weakness. You were saying that you were expecting flat for a change in private payrolls.
We are looking for an 80,000 gain. Today's claims number would suggest figures closer to flat. So I think that does signal some downside risk. It really was the sentiment numbers that are, and the employment components in particular, that are giving an upward spin to our number and generating the 80,000 gain for tomorrow.
Hey, Mike, it's Mike McKee. We wonder, we talk about needing to go below 400,000 to get solid job growth, but can we have some job growth without doing that? We've been stuck in this range since February, and we did see early job gains earlier in the year of a couple 100,000.
Yes, and in fact, it's the case that if you do see a sustained and large run-up in unemployment, you might expect a higher level of initial claims to exist alongside payrolls statistically in this cycle than you have in past cycles. So there is some potential that initial claims will simply remain high relative to payrolls for a couple of years into this cycle. But I think it's hard to explain the premium from the 400,000 number you referenced to a number as high as the 460 to 470 area. I think that's really the concern for economists.